What's good, YouTube? It's your boy KidFreak. Welcome back to another video, another trade breakdown video. In today's video, I'm gonna be breaking down a trade that made me personally $100 in about 7 minutes. Right? It was a 50-point move, risking 20 points. It was one micro contract. It was on a Friday, so it only took 7 minutes. So without further ado, I'm gonna break down from step by step on what was my bias, what led me to the bias, what time I entered, how I entered, and why I exited. Right, so without further ado, let's get into the charts and let's break it down. All right, here I am. You guys are probably wondering why I changed my shirt, because honestly, this is not my first time recording this portion of the video where I'm actually breaking down the video. I had to do it again. I honestly don't think the universe wants me to share this information, but here I am. I'm doing it anyways. Okay, so to start off, again, I told you guys this was a 50-point move on the micro contracts, and I received one contract for a 50-point move. This is actually the setup right here. As you can see, this was on a Friday, June 20th. I took the entry around 9:46. If you guys go back in your calendar, June 19th was June 19th. So the day before this, which was a Thursday, it was actually a holiday. So I took that into consideration. I personally do not trade holidays, right? But I took that information and let's get right into it. So I'm gonna go on a daily, I'm gonna go on a weekly chart just so you guys can see something. We are right now in this February 24th Monday weekly gap right here, right? You guys see this? Right? So I did have this as a catalyst. I understood that. That's what that box is, if you're wondering. So let's go down to the daily. No. Let's go down to the no. Yeah. Let's go down to the 15. Right. So the market opens at 9:30. The first thing that I do every single trading day, I look for the ORG, the opening range gap. Okay. I do have this information in my free guide, free course on the WAP. You could check out my Discord. You could check out the description. So there's a few lingos and a few things that I will say, smart money concepts. If you follow me and you're up to date, then you will know where I'm coming from. In my last video, I did mention this as well. I mentioned understanding the aspect of premium and discount ranges and discount prices. So that's what I'm about to show you guys right here, right now, because this is exactly what I did on this Friday to get my bias and to get my entry and just to get that overall setup, right? So what I did was, we looked at Wednesday's close, which was, no, I'm sorry, not Wednesday's close. Thursday's close, which was, it closed again. It was a holiday and it closed early. The market closed on holidays. It's usually half day, so it closed around 12:45 p.m. So what I'm gonna do is, I like to mark that. We're gonna mark that. That was the closing price of yesterday. Usually it's 4:15, so keep that in mind. Only reason I'm doing 12:45 because the day prior to this was a holiday, but usually this time would be 4:15 or 4 o'clock, one or the other, relatively close. But that price, whatever that time when it closes, I will drag that up right until 9:30, and I'm gonna make that blue. That's what these other blue boxes are. It's just, let me go on a real trading hours so you can also, regular trading hours so you can also see. Regular trading hours won't show you Asian and London session, basically. So as you can see, let me move this again so it looks a little more cleaner. It's showing me Wednesday, but the reason it's showing me, see how it cuts from Wednesday to Friday? Because Thursday wasn't a trading day, okay? But you guys are gonna have to bear with me. I'm gonna go to electronic trading hours, and we're gonna use Thursday's close, okay? not Fridays, not Wednesdays close. Wednesday, either or would work. End of the day, we're still in a premium. You'll see that as we get into the video. So let's just go back to what I was doing. 12:45, 9:30, boom. Okay, so this is what I did. This is what we see. As you can see, I'm gonna toggle this on my session indicator. This was Asian, this was London, and we have New York opening around 8 o'clock. 8. Wow. Yeah, I have it toggled to 8:30. So 8:30 price, New York session. That's pre-market up until 9:30. So I'm gonna toggle this off. So we have here our opening range gap, right? We understand that this is our levels. This is the 50. This is the upper quadrant would be our premium prices, and the bottom would be our lower prices. Off rip, seeing that 9:30 opened at 22,074, I understood right off the bat that we are in a premium price, right? This is a Friday premium price. We're up compared from the day prior, right? Now, what I'm also going to do is I'm going to go down to the 1 minute chart, because that is where I entered. We have 9:30 price open right here. For precision's sake, let's get it right under there. All right, so we have our opening range gap. What I'm gonna do is I'm gonna open to on the left side. I'm gonna open up another chart. You're gonna see that's the hourly. Okay, we're looking at, again, Friday, June 20th. So this is where we're at right here. 9 o'clock hourly candle is right here. Okay, opening up at the hourly, opening up at 22,028, which was the hour of 9 o'clock. That was where it opened. You can also see on this side, this is my, on the left side, you can see is the 1 minute chart, and right is the hourly chart. So about 22,030, 9 o'clock. It matches up perfectly. About opening price, 22.30. All right. So from here, the 9 o'clock candle rose up about 89 points. Okay. So what I did was I let the first 30 minutes pass by, about 15, 20 minutes pass by. And on the hourly chart, we can also see that it took a major daily level, okay, which was right over here. This right here. This was Wednesday's high. So that is a daily high. There is liquidity sitting above there. So we took that into consideration. Once I seen that level get taken, which is 22,100, as you can see right over here, 22,100. Boom, 22,100. That means that daily high got swept. All right, information right there. Again, we did not press the button. Okay, so we have, this is, keep this in mind. We have 9:30 opening here at 22,074. The first minute, and what it did. Again, I'm not quick to press the button off of market open. We don't do that. Okay, so it opened at 22,074, dropped down, took the early buyers at 925, took that liquidity, sweeped it, and started to rise up. Again, I'm still cash here. I waited for the first presented fair value gap. The first gap that shows up, which gives me a good benchmark, it gives me a good catalyst to have an idea of where price wants to go. Okay, that is good information. I also put that in my last video. I mentioned it. Okay, so that is what 935 gap is. Okay, I understood that price was at a daily level, which is 100. Once it sweeped it, all I'm looking for is sales right now, because we are in a premium price range compared to the opening range gap. Okay, so I'm looking for sell side liquidity in that 50% level to get touched. Okay, as soon as I seen price return back to the first presented fair value gap, which was right over here on 946, I entered inside that inefficiency 935 gap. Entering there, risking about 20 points, not expecting to go any higher, to go for 1 or 2, or at least some liquidity down low. I ended up selling right at 22,040, which was the 930 low. Okay, liquidity there. Again, It did reach our 50% level of that opening range gap, but I didn't hold for that long because I'm already good. Okay. So that is honestly that's how I got my entry, and that's why I exited. Honestly, I should have held longer because there is way more liquidity and it didn't even enter 25% of that opening range gap. 50% is the target. Okay, which would have been about an extra 130 points. Okay, we can talk about it. But we're not going to talk about it now. We're going to keep it real simple, short. This was the trade setup that I did take. It was fire. A nice 1 to 2.5 ratio, so it kept the account up. Risked 20 points, one micro contract, $40 to make $100. You know, you can't beat that. On a consistent basis, your account is up and you're profitable. All right, this is just one setup that I did take that Friday, and I just really wanted to share it, break down with you guys. I really hope you guys enjoy the video. Understand that I did use the higher time frame to make my bias. Understand that we did enter in a premium price, which was inside of that wick in that hourly candle. Okay. Just to give you guys proof that I did enter this trade, I'm gonna go to my Trade-Evade, and I'm gonna scroll down. As you can see, I entered the sell at 22,090. Buying, which was when I released the trade, 22,044 to make about $93. Of course, there's fees. Smooth setup, can't complain. Okay, entering around 22.90, buying it again at 22,040 just to release that contract, and that was it. Okay, 50 points locked in. With understanding that there is a way bigger range that I could have attacked, with no doubt. But again, I'm just trying to get a majority of that move. That's it. That's all I need. That's all we need. So understanding that where the liquidity at, what liquidity did sweep, a higher time frame liquidity to be specific, understanding where the gaps are at, the inefficiency, understanding where we're at from a premium and discount stance, right? And using that opening range gap as a tool. Okay, that's literally what I did, what I have been doing that's what I kind of do a lot. So I really hope you guys enjoy this video. You know, if you guys learned something, like this video. If you guys want more trade breakdowns, I have no problem doing it because we trade here. Subscribe to the channel if you're new. Check out my free Discord. Check out my free course. Check out the videos that I got coming. All in the description. Again, I hope you guys enjoy the video, and I'll catch you on the next one.